Today I wanted to put my finance hat on and run you through something most business owners don't learn until it's too late, and how to make the best financial decision for your business success into the future. Now, most entrepreneurs use this equation when it comes to business profit. They take revenue minus expenses, and that's your profit. And for most people, when they look at profit, they think, fantastic, that's money in my bank account. That profit is money in my personal bank account, which means if my business does 100K in profit, I get 100K in my personal bank account, which I can then go spend on cars. And so that 100K becomes my own personal income. Now, for most business owners, this is the only financial model they have either ever been taught or they've ever known. And I call this financial model the self-employed scheme. And let me explain why. This financial model is designed to keep you working in your business forever. And the sad reality of most businesses is business owners haven't created themselves a business, they've just created themselves a job with longer hours, harder work, and more financial commitment. So how do we actually structure our business financially to ensure that we can actually continue to grow the business so that we no longer have to work in it? We can continue to make our own personal investments and pay for our own personal bills. Let me show you how to do it. Now, the way a lot of business owners think about business is that when it comes to the business operating, that money is their money. When the business get paid, I get paid. When in reality, we need to think of business a little differently. We have business money and we have personal money. Business profitability does not equate to personal profitability. What most people will do is they will own a company. I own an acreage maintenance company. And this acreage maintenance company, per month, they generate $10,000 of profit. Now, what most entrepreneurs would do is they would then take that $10,000 out of the business and move it into a personal bank account. Right, so most people would take that $10,000 profit a month and go and spend it on all their expenses. After that, they would then go and use that to invest any remaining money, if any, they would go and invest. This model works fantastic if your business is already self-managed. But for a business that is just starting, this money model leaves no room for growing the number one asset in your artillery, which is your business. Every year, the housing market generates an 8% return on average. The share market usually is around about the same. We're going to go 7% return. Now, for business, the return on average is 25%. Every dollar of additional investment I put into my business, I get 25 cents back. How can I utilize my biggest asset, that being my business, to continue growing my own portfolio, but most importantly, grow my business, which is my main revenue builder? Cash flow is king. When we talk about profitability, we talk about the money a business makes, right? So at the end of the year, the business makes $120,000 profit. When we talk about cash flow, we talk about the amount of money that comes in versus the amount of money that comes out. Ice cream company. During winter, the ice cream company still has to pay their operating expenses, the cost of wages, their tax, but at the same time, their revenue is going to significantly drop because it's winter. But then in summer, they make 90% of their profits because it's summer. Everyone goes and buys ice cream. But what most business owners would do is if they have a fantastic month, a 90K month, they would take that 90K, move it into their own personal name, and use that to pay expenses, go on a holiday, and then later on in the year, when they're struggling and they're only making 20K a month, and they have a $30,000 bill come up for a bit of equipment that broke, they don't actually have the cash reserve to be able to afford it. If you expect to be able to build a company without having some sort of financial struggle personally, then business is just not for you. Whether you have $100,000 in savings or you have nothing in savings, every single business owner goes through this phase of a period of their life where they simply do not make money. If you are living at home, you're a young teenager like myself, you're living at home and you have very little expenses, do not waste this time taking money out of the company and trying to pump it into something else. Now, this is not financial advice. This is simply how I structure my business and how I've created a money model inside my business that allows it to grow, but I can also go on holidays and spend time with family. And most importantly, be able to manage cash flow. This business makes $15,000 profit per year. We then have my personal bank account. Now, when it comes to my personal setup, there are two main things you should be focusing on. The first is your daily expenses. On the other side, I then have personal investments. Every single business needs to have what we call a cash reserve. Most business owners don't have any cash reserve within their business, which means when tough times come, businesses really struggle. Remember, we're talking about cash flow. Now, during the GFC, the global financial crisis of 2008, most businesses shut down. However, the businesses that succeeded were the ones that had cash reserves, because most businesses are profitable. Most businesses are profitable. But the successful ones have this unique ability to be able to manage and make their way through tough economical times. What is a good buffer? Now, my cash reserve for most of my businesses is 6 months worth of expenses. My business can operate as normal with 6 months of expenses if something goes wrong. Your cash buffer should be your main priority of your business, which means you do not take any personal finances, including for your own benefit, your own day-to-day, out of your business until you have a cash buffer equal to 6 months of expenses. If that means you need to go pick up a part-time job to be able to afford your daily expenses, then you have to go pick up a part-time job. For nearly 2 years, I worked with my dad, who coincidentally owns a lawn mowing company, and I would work with him to pay for car expenses, insurance. Once you have that cash buffer, we can now look at taking out a portion for my monthly expenses and a portion out for personal investment. We are now in what we call a cash flow positive money model, which means if there is ever a month where something goes wrong, I have the funds to be able to manage through that time and continue the business moving forward.